There's a lot of news in the real estate market in Phoenix this week, so let's dive into it. But first, here's my latest piece called The Volatility Mismatch Theory of Housing Supply and Demand, and it explains why housing prices are so sensitive to changes in demand or so volatile in their prices. It's because the supply is so tight, so fixed. And also, I did one on Case-Shiller, and this one's kind of scary. Let's look at this. Here's my analysis. I calculate using the Case-Shiller numbers, real mortgage payment price and index, and the price right now for the U.S. is about as high as it was at the peak of the bubble in the mid 2000s, and a lot higher than it was in the savings and loan crisis. So hopefully I miscalculated something, but I don't think I have. But on the upside, from May 2022, the median single-family home price went up $200,000 in Metro Phoenix. Wow. But there's been a super fast shift in the market. For example, when I looked at February, the number of new houses hitting them, not new houses, of single family houses hitting the market, new listings, it was the lowest for a February in at least 20 years. But by May, the number was the second highest for a May in the last 10 years. Huge change in the market with the number of new homes hitting the market, number of new listings hitting the market. This is from April, but even in April, there was still a ton of investors buying houses. It was a huge part of the market. That may be changing now. So let's look at the active listings for this is single family homes, normal, there's no distress sales, and it's for the whole Phoenix metro area MLS. And the red line is for 2022. And so you can see it's going up super fast, a lot faster than other times. And this is the time of year where it tends to fade a little bit or go down a little bit, and it's going up. So it's going against seasonality, which means it's a super strong upward trend. Of course, it's because of the interest rates increasing so fast. But by the end of the summer, we should be back to normal as far as the whole metro area. But let's look at Pinal County, which is kind of just the exurbs, to the east and to the south of Phoenix. Okay, and this one, we're just looking at Pinal County. It's the same graph. Red is 2022, but it's already gone up. This is the active listings are already above what they were in 2018. So we're kind of back to a normal number of homes for sale out on the exurbs, on the periphery of town, periphery of Phoenix. So why were there more homes for sale out in Pinal County? About half of it was because there were more homes hitting the market, and about half of it was because there were fewer sales. Now, where is that extra supply coming from? It's probably coming from about investors, flip investors is probably half of it. And the other half is new homes. There's more new homes selling than at this time last year. Now, Mike Orr runs the Cromford Report. He's a great analyst. Oh my gosh, he's good. He tends to be bullish. I tend to be bearish. I'm always a worrier, seeing what can go wrong. But here's some quotes from him. He said, "We admit to being surprised at how quickly the market is cooling. We expected a downward trend, but did not anticipate it would be so dramatic. The last time we saw a similar frenzied market cool down very quickly was in April to November 2005. This is a more striking reversal than we experienced that year." Yikes. Mike's recommendation is to be nice to buyers. So we're seeing a huge change in the market. Will it continue? It's so strong right now, it probably will continue for a long time. Now, like say last year at this time, or was in May, early May, I said, I think the price is going to level off in the summer, and Mike didn't agree, but I turned out to be right. But then later on, I thought the inventory would increase in the fall, and Mike said, no, they're going to increase in the fall. So he was right. So I was right about one thing, he was right about the other, but we both agree that this is kind of bad. Okay, and here's a little think talk. My idea is I've been wondering is one reason that the boom was so big and so high because of the internet? Because people could get that information. There's this whole idea of like people, if they expect prices to continue going up, they're willing to pay more. Right? I'm willing to pay more now because I know there's going to go up in the future. So why not? Let's just buy the house. So there was so much information because of the internet that had an effect. And I just wonder, would that have an effect on the downside too? I haven't really figured that out. I haven't thought that through. Let me know what you think. But the whole idea is about related to price expectations and how they affect how much people are willing to buy. So basically, what happens is the optimists buy, and now they own a ton. So the optimists buy, prices go up a little bit, And so they think prices are going to go up more, but also they're more able to. They're able to get more leverage. They're able to take out debt. They can, so there's what is called the credit cycle. As prices go up, then people maybe lower their credit standards a little bit, and plus you could borrow more, meaning the down payment would be less. So that could be an effect, and both of those things add to more money chasing homes from investors, which drives prices up even more. And you get into this feedback loop, which can cause prices to go nuts, which I think is a big part of what we've seen. And then I think that people just ignore this. What I think is a fundamental factor is the expectations of future prices are a fundamental driver of the price increases. But what happens when prices start to fall? Those super optimistic buyers, they've bought houses already. And now if prices fall a little bit, they're in kind of trouble. They can't borrow more because they have so much debt. They were so optimistic. They had so much debt. They're really levered to the max. So when prices go down, they're out of the market. So who's going to buy now? It's going to be people who are less optimistic. And they don't think it's worth, houses are worth as much, so they're not going to be paying as much. So you have this effect where prices can get stranded at a high level because the most optimistic buyers kind of get shut out of the market when prices fall because they have so much debt, so much leverage. Okay, so that makes them sensitive to any bad news. And hopefully we don't get in the same reverse situation, which theoretically you could when prices start to fall. But I also think because because of what happened last time in the mid 2005, et cetera, that the government would come in and step in and stop any fall a lot quicker than they did, or they didn't do anything last time. They would step in this time. And I also think we had things like huge government programs recently with COVID, like mortgage forbearance. I think the government could step in again then, so that could help them slow down the declines. Then the real problem is, do prices just end up, 10 years from now, giving anything higher? Which is worse, prices correcting down or prices continuing to go up? Ideally, I hope we would decide home price stability is something that is super important, and that should be a focus. And we should stop let home prices being jacked around by the Fed, and they're trying to manipulate the economy. They sacrifice home price stability and household wealth stability.